Good evening, ladies and gentlemen. Today we are going to be going through donations tax. We have two questions that we'll do at the end of our session. But as you know, we always start with testing our prior knowledge. So when is donations tax levied?
I think they are levied every time a taxpayer makes a donation, whenever a taxpayer makes a donation.
Awesome. So when a person makes a donation, SARS says, come and declare it to us. Let us know that you have made a donation. There's no way for SARS to know that people have made a donation unless they look at their financial statements of the people. That is when they can pick up the donations. But at most times, it works on an honesty policy. I'd call it that. So it's something that a taxpayer needs to go to SARS and say, listen, during this year of assessment, I made a donation. I am a resident of the country and I made a donation to another person. So I need to now come and pay the donations tax on this amount. So it's important for you to recognize that the person needs to be a resident of South Africa. And the donations can come about where you give of a property. It can also be you actually waiving a right to something. So let's say I give a loan to a friend, and then I decide, you know what, my friend, I can see you're really struggling. I'm just going to write that loan off, along with all the interest that I was going to charge you on that loan. That is also deemed to be a donation. So you then need to come and declare the donation to SARS. Okay. So which kinds of donations are exempt? So Section 56 gives us a list of donations that will be viewed as being exempt. Yes, go ahead, Meets.
Then when a spouse, when someone is married to another person in community of property and they donate to their spouse, is that
Yeah, yes, that is correct. So that is in terms of Section 56(1)(b), where it tells us that if spouses make a donation to each other, then that will be yes.
I don't know, I was disconnected. Did you hear me?
Yes, we heard you. You were correct. Thank you. Thank you so much. So Section 56(1)(b) is the one that tells us that where spouses make a donation to each other, then they will be exempt, right? Then there's also a provision where it says that if there is a donation to a spouse in terms of an antenuptial or a post-nuptial contract, that will also be exempt. If you are contemplating death, that donation that you're making will be exempt. So you have not yet donated the specific asset or property. You're only going to donate it after you pass away. So you are starting to give off your things. You can see that you're unwell. You start saying, okay, this I can give to Beat, and this I'm going to give to Pompey, and that one I'm going to give to the next person, right? So that actually hasn't taken place as yet. So once you have died, then the people will be donated those properties as part of your estate. The estate will be the one who gives the donation to them, right? So in that instance, you as the person who's making that donation while you're still alive will not be taxed on that donation. Then again, when you only giving that donation after you have died, again, that will also not be a donation for donations tax purposes. It will be exempt. Where the donation has been cancelled within 6 months, donations to any traditional council, traditional community, or tribe, as defined in Section 110, Section 10(1)(t). Then further, we have donations that are made of properties that are situated outside of the Republic. If such a property was acquired before you became a resident of the Republic, or you inherited the property from someone who is a resident of another country, or you purchased that property out of funds that you received from a property that you might have disposed of before you became a resident of the country of South Africa, or it's from the property that you inherited from someone who is not a resident of South Africa. So if you are acquiring that property from those funds, then it will be exempt. Then again, we have where there is a donation to any sphere of government, as referred to in Section 10(1)(a), and also any donation in the form of a voluntary award. Then there's also exemptions where you are making a distribution to the trust beneficiaries, donations of a right that is not a usufruct or a fiduciary interest, to use a farming property to your child. So if you are now donating the right to use the farm, but it's not a usufruct and it's not a fiduciary interest, then that will be then exempt, and specifically for a farming property. Then where you make a donation to a public benefit organization, in terms of the land reform program or national development program, donations between companies in the same group. Okay, so where you are a company and you make casual gifts for the total of 10,000 Rand, those will be exempt. If you are a natural person, then you have a general exemption of 100,000 Rand every year. And then where you are taking care of your persons, let's say your children, your mother, or someone that is considered to be reasonable by the commissioner, that will also be seen as an exempt donation. So if I now buy my kids clothes, I give them food, that will be me maintaining them. So that will then be viewed as a bona fide contribution to the maintenance of my children. Even if it's my mother, that will then be viewed as an exempt donation. Okay. So there's quite a number of the donations that are exempt. So it is beneficial for you to go through them and revise them, make notes for yourself so that you can remember the information. So at what rate is donations tax levied?
Limited to 10% of taxable income.
No. Donations tax and the deduction for your Section 18 Cap A are two separate things, right? So where you go and you make a donation to a public benefit organization that is that can issue you with a Section 18 Cap A exemption certificate, that is what you are referring to. So now we're talking donations tax. We're not talking about the deduction that is allowed for you when you're calculating your taxable income for the year. Adele?
The percentage is 20%. And then if it's above 30 million, it's 25%.
Yes, thank you. And delay?
Yeah, I wanted to mention that one.
Okay, awesome, thank you.
Okay.
So in terms of Section 64 of the Income Tax Act, it tells us that when you make an aggregate donation of 30 million Rand, or less than 30 million rand, you will be responsible to pay over the donations tax at the rate of 20%. If it is more than the 30 million, you will use the 25%. So it is on the aggregate, not on the specific transaction that you have, but the full year's transactions. So if I make a donation in March of 10 million rand, then I make another donation of 5 million, and then I make another donation of 15 million, and then I make another donation of 5,000 rand. I cannot say when I make that donation of 5,000 rand, I'm going to use 20%. I must use the 25% because now I have exceeded the 30 million. So you need to keep record of how much you have donated throughout the year and then make the calculation for the full year. Okay. Awesome. If a married couple makes a donation, what are the implications of the donation to each spouse?
I am just thinking there shouldn't be any tax because it's like being taxed on what, I mean, when you are a married couple donating to the other one, it's the same as your own money because you are together.
Okay.
So I feel like it shouldn't be taxed.
I hear what you're saying. I hear you. I hear you. Serena.
I think that if it's a property of joint estate, then they have to share 50-50. But then if it's not a joint estate, then they will deem it as donated by one of the spouses.
100% correct. Thank you so much. So I hear you, Adele, as you are saying that if we are donating it to each other, yes, that's why we have that exemption. But then if we, let's say my husband and myself, we decide that we want to donate a property to, I don't know
Each
who,
other.
but no, to someone else, not to each other. We are donating the property to someone else now. Okay. So we make the decision to donate the property, let's say, to a friend, because we love this friend very much. We want to donate our house to them. The extra house that we have, we want to donate it to that person. So, and that property is in our joint estate. It is deemed to have been donated 50% by myself and 50% by my husband. But if my husband goes and makes a donation by himself to his beloved friend outside of the joint estate, then that donation will be his and his alone. I will not have any implications on that property that he is donating by himself. Yeah. Okay. All right. So it's easy to remember it this way. If we decide together and it's part of our joint estate, it's 50-50. But if he makes that decision by himself, and he donates it without me and it's not part of my property, then he can be taxed by himself. Okay. Austin, I think it was, you had your hand up. You can go ahead.
Okay, good evening, everyone.
Good evening.
Ma'am, I don't catch you correctly on these two scenarios. Say, for example, a couple is donating to somebody or to somewhere as a couple. Then now you made an example of individual. If a husband, for example, decide alone to go and donate, then it will be his responsibility to be taxed on what he donated. In my understanding, I thought if, for example, the scenario will come to say, so and so are married in community of property, then they donated this much. Then I thought maybe it's the same as if myself, I donate as an individual, I mean, as a husband, although I'm married, I thought maybe the treatment will be the same because the bottom line is we are married in community of property.
If the property is part of our joint estate, remember some people don't have, not everything that they own are part of the joint estate. Some people are married, what's it called, out of community of property, and they have some assets that don't form part of your joint estate. let's say I inherit a property from my parents, and my parents say that according to their will, that property must never be part of my joint estate with my husband or whatever. Then that property, if I decide to donate it to my sister, then that property will not affect my husband because it's not part of our joint estate. But if we are donating from the things that we own together, then we will be taxed together. But if it's not part of the joint estate, so you need to look at whether it's forming part of the joint estate. If it's not, then it's not going to affect both people.
I get you. Thank you very much.
Okay, awesome. And then, if a shareholder instructs a company to make a donation, what would be the implications of the donation to the company and the shareholder? Okay, so with this one, what then happens is I am a shareholder. Okay, hi, Precious, you can go ahead.
All right. Can I try on this one? Just out of the box. Okay. So if a shareholder, right, instructs a company, does it have to have approval of the whole board or just one shareholder without approval of the board? Because if it's in agreement, if it's in agreement with the whole board, right, then the company is the one that should be taxed. And when they have donated to whatever company that they have donated, they must get a certificate. I think it's Section 18A certificate, if I'm not mistaken, that shows that you have donated to a public entity or an NPO or a company that allows you to then claim your donations tax. But if you donate to none of the above that were listed as those that are supposed to get donations, then the company bears the full cost of that donation. I don't know if I'm lying or not.
Let's find out. So let's see. So I am the shareholder, the majority shareholder, for instance, in Dineo's Pty Limited, and I tell the people there that listen, I want you guys to donate to my beautiful daughter 80,000 Rand. Okay? And then they do that. Obviously, I am the one who instructed the company to make that donation, but I don't want it to seem like it came from me. I want it to seem like it came from the company. And then in the back rooms, me and my daughter, we agree or she's going to give me that money. So what we actually trying to do, or what SARS and Treasury are trying to do, is they're trying to have an anti-avoidance provision. So what then needs to happen is when that person who instructed the company to make the donation, they are then seen as the person who actually makes the donation. So we remove that middle man being the company, and we say, you, Dineo, are the one who actually made that donation to your lovely daughter, and hence you then need to pay the donations tax on that 80,000 Rand that you then donated to your daughter. Okay, does that make sense?
Ma'am?
Yes, you can go ahead.
Can I ask a question on that? Would that only happen or be allowed if what's the word? My shares are higher than other shareholders.
Not necessarily, because you have the majority shareholder. You shareholding, you are more likely to have more influence than that person who has 1% or 2%.
Oh, okay.
What are the chances that the company is going to be like, oh yeah, our 2% shareholder over there wants us to make a donation to their daughter, and then they do it.
They won't listen.
They won't listen. So the chances are...
It's understandable only when it's done by the majority shareholder.
Exactly. So in that case, then that person, as long as the company does it on the instruction of someone and they agree to do it, then that person is the one that is deemed to be seen as the donor of that specific amount.
Yeah, okay. All right. Thank you.
Okay, Precious, you had your hand up as well.
All right. So you're saying a relationship must be determined. Does it matter to which organization, or it's specifically only on individuals? Or let's say the shareholder instruct the company to make a donation to his church or to another church or an NPO.
Okay, remember, then you need to look at your exemption rules after that, right? So if I say the company must go and make a donation to my church, then my church won't have, well, depending on the church, some churches have, other churches don't. My church won't have a Section 18 Cap A certificate to give to me, so I won't be able to have an exemption for that. So I will still need to pay the donations tax. But then someone who is donating to, let's say, the breast cancer or the cancer foundation, I think it's cancer foundation, I think they are an NPO, and they will then issue you a Section 18 A certificate, and you know that in terms of Section 56, they are exempt for donations tax purposes, so I will not need to pay any donations tax on that transaction. Yes, Andile?
Good evening, Dino. I wanted to ask if SARS investigate, let's say it's an NPO, whether it's owned maybe by a relative of the shareholder or something.
It will depend. Everything is dependent on whether or not SARS is away. If someone knows something and then they go and report it to SARS, then obviously that will then be looked into. Yeah, I'm not sure, hey? I don't know. So I can't tell you. I don't have the answer for you. SARS has, according to the reports that are out there, they are they have functionality within the organization where they use data that is available to them to go and identify people that they need to look into and see whether or not people are abusing the Section 18A deductions and even exemptions for donations tax purposes. So they have information that the ordinary taxpayer won't know about, and they have access to certain data that they then use to then identify people that they will go and look at. Okay, I hope I answered you, but like it's one of those things, I'm not sure. It's one of those you need to go and check in the newspapers if that information is readily available or not.
Okay.
All right. Okay. Then, with regards to the donations tax, they will have the donations tax. Then, now the company has now done something for the shareholder. They need to then declare the dividends tax on this transaction. So there's two sides to the story. I then, as a shareholder, I will then be deemed to have received a dividends for that value that I have taken out of the company as a donation to my daughter or to my friend or to my church. Then the company is then supposed to then see that as a dividend to me. Okay. So whatever I take out from the company, that thing will be then seen as a dividend to me. So remember, there's always two sides to the story. Whether the shareholder makes or requests the company to make a donation on their behalf, that shareholder will be then viewed as the person making the donation. Then they must pay the donations tax over to SARS. Then the second step is the company then needs to declare a dividend on that value that the shareholder has extracted from the company. Okay. All right, you. Then what value will be placed on property donated to determine the donations tax? And this is just for your normal property, not your limited interest like your user factor and pay dominions. Yes, Serena.
I think it's 30 million rand.
Okay. Tell me, why did you think it's 30 million rand?
We placed the value of 30 million rand so that we can then ascertain whether we're using the 20% rate or we're using the 25% rate. Where if the property is valued less than 30 million, then we use the 20%. But if it's more than 30 million rand, then we use the 25%.
Okay, I follow your train of thought. Thank you. Kidimeti.
I think it's the fair value or the market price of the property.
Thank you, Leseho.
Okay, I also wanted to say it will be on the market value of the property.
Awesome. Thank you. So that is correct. So we will use the market value, or what they call it. They say it is the price that a willing buyer and a willing seller in an open market would agree upon for the property in an arm's length transaction. And that is known as the fair market value. So then on the date that the donation actually takes place. So if in your question they tell you two amounts, then they tell you the amount that the person purchased the good or the property for, and then they tell you the market value of that property, you would use the market value of that property. Okay. Unless, if in the opinion of the commissioner, the value that is placed on that donation is too little, then the commissioner can then readjust that fair market value to any other amount or another fair market value amount. So let's say I say my bottle is worth 50 rand in the fair market value, but then I went and I chose the cheapest price that I could find, right? But then the commissioner of SARS says, no, there's no ways that bottle's worth 200 rand. So then we will then use the 200 rand instead of the 50 rand. Okay. Then another instance is where we have a piece of property where bona fide farming activities takes place. Then you would use the fair market value of that property reduced by 30%. So if there is a property that is being donated where bona fide farming activities are carried on, then you need to reduce it by 30% before you can determine what the value of that property is. Okay. So you would actually take the 70% of that fair market value. Awesomeness. So what is the difference between a usufruct and a bare dominium? I hope I'm saying it right. Usufruct and a bare dominium.
Oh, usufruct is given to a person a right of use of the property. She or he can stay, if it's a house or something, she or he can stay at the house, or she can rent it out and do whatever she wants to do to it, but cannot sell it. And then the dominium, it's when a person is the rightful owner of the property, but can only have it, let's say, after the person, the usufruct has passed, or if they have like agreement on what they want to do with the property.
Okay, awesome. Kidimeti, sorry. You can
Let
go.
me just also give it a try. So the use of so the use of what it's when the beneficiary enjoys the fruits in ownership of it. Then the third dominion is when the person has when the beneficiary gets the asset at a later stage from the usufruct. I don't know.
Awesome, thank you. And then Linda.
The usufruct is the person who's got the right to use the property for the rest of their lives. And then the bare dominion is the person who owns the property, but they cannot, they only entitled to it after the usufruct has passed.
Awesome. So I can see you guys understand this concept. So a usufruct is the one who gets, or is the fruit or the income from that property. So you can use the property, you can live in the property, but you cannot sell that property. You do not have the right to dispose of that property. Okay, so you have a limited interest in the property. You can use it, you can make money from it, but you cannot sell it. Okay. Then the bare dominium is the person who actually owns the property, right? But they do not have the benefit of using it, and they don't have the benefit of the fruit or the income from that property. And then they also have a limited interest in regards to selling that property. They can only sell it subject to the usufruct. So each person has a limited use and they or a limited interest in that property, and no one can actually make a decision without the other, so to speak. Okay. Then, what is the life expectancy of the limited interest calculation concerns if a person is not a natural person? Hello?
It is 50 years.
50 years. Okay. And then the other person, Patrick?
I would say it's 50 years as well.
Okay. Awesome. That is correct. So when we are using, when we are determining the life expectancy of a person who's not a natural person, we always want to use 50 years. And then for the rest of us, the people, we will go to the tables that will be provided to you in your paper. Okay, so now we're going to go through an example. I hope everybody understood what we just covered. We're going to go through an example so that we can see how much of the information makes sense. Okay, so we will be going through a question. A first question, right? It's worth 16 marks. The 16 marks should be done within 29 minutes. Okay, so they tell us to use the table to calculate the total donations tax payable by Jack Black as a result of the donations he made during the period 1 March 2023 to 29 February 2024. Okay, so it's a principle. We are looking at the principle of the thing, not so much on the figures, right? Okay. So let's see. What does it tell us about Jack Black? They tell us firstly that he is a South African resident. So that tells us that he will be liable for donations tax. That's the first part, right? Then they tell us that he was born on the 19th of August, 1950. That makes him, what age is that? 1950 minus 2024 will give us 74. Okay, so he is 74 in this year of 2024. I'm going to just write that down. We're going to need his age. He's 74 years old. Okay. Then they tell us, firstly, he, on the 1st of March, 2023, he gave his wife, Jessie, the family residence, which had originally cost 75,000 Rand in 1970 when Jake bought the house. Now this house is valued at 890,000 on the 1st of March 2023. How would we treat this transaction? So what is the amount that we're going to use? Are we using the 75,000 Rand or the 890,000 Rand? Let's start there.
The 890,000.
Thank you. I thought my mic stopped working there. 890,000 Rand. Would this amount have an exemption? Yes or no? Would this amount have an exemption? Remember, Jessie is his wife. Yes, Linda.
Yes, it will have an exemption.
Yes.
Because
So the
yeah,
Mhm.
yeah, because it's a donation from the spouse. It
So
makes
in
it
this
fully
instance,
exempt.
yes. So in this instance, there will be an exemption in terms of section 56(1)(b), because this is his lovely wife, and SARS and Treasury are so kind. They understand that it wouldn't make sense to make a spouse pay donations tax for donations that they make to their spouse. Excuse me. Okay. So that one is an easy 1 mark. So it's good for you to explain why is it that you're saying that there is no donations tax on the property. Okay. Then they tell us on the same day, he also donated his farm in Botswana to a friend, Blackie White. On the 1st of March 2023, this farm had a market value of 500,000 Rand. Jake inherited this farm from his late father on the 1st of March 2002. His father had been a resident of Botswana all his life. How would we treat this transaction? First of all, what is the value of the property that is being donated?
The value is 500,000.
Thank you. The value is 500,000. And then how do we treat this property? Yes, Serena.
I think this donation is exempt because it's outside South Africa.
Awesome. So, first of all, the exemption is applicable because the property is outside of the Republic and it was inherited from someone who was not a resident of South Africa. Okay, so we need to make sure that the specific provisions of that exemption apply. So if they had said to us that he had bought this property with the money that he makes here in South Africa, he's always been a resident of South Africa, that exemption would not have applied because it wasn't inherited from someone who was not a resident of South Africa, and he didn't purchase it before he became a resident of South Africa. It was from funds that he used or he received in South Africa while he was working here. Okay, but in this instance, because he inherited it from someone outside of the Republic, it would be exempt. There was a hand and I missed it. Are you covered?
Yeah, I wanted to ask if he was a resident, but the property was outside. How do you deal with it?
Okay, so if he was a resident, he is a resident, right? And he purchased the property while he was a resident of South Africa, then he would then have to pay the donations tax. The exemption in section 56(1)(g) would then not apply. If he had gotten the property from money that he had received from selling a property that he acquired from someone who was never a resident of South Africa, then he could have claimed the exemption. But or if he was a resident of Botswana before he came to South Africa, and then he sold that property and bought another one with outside, then he could then get the exemption. But if he then was a resident of South Africa all along, purchased the property outside of South Africa, donated that property, he would then have to pay the donations tax like everybody else. Yeah.
Hi,
Happy?
Dineo.
Hi.
Just a quick question.
Yes.
Is an inheritance exempt?
Remember, with inheritance, you will have your estate duty provisions that will come into effect. So then, in this instance, we are, okay, wait, let me think about this 2 seconds. Inheritance for donations tax, if I am donating it in contemplation of death, it's exempt. If I donated, but you will only receive it when I die, it's exempt. If I die, then I give you my things according to my will. Then there will be provisions of estate duty that will then apply, and then whoever needs to pay that estate duty, either my estate or the person who inherited, will then have to pay the estate duty on that property.
All right, thank you. Understood.
Yeah, awesome. Okie dokie. Let's look at our next transaction. Then they tell us that he waived a debt owed by his cousin, John Smith, a full-time university student to whom he had lent 12,000 Rand on the 1st of May 2022. At an interest rate of 8% per annum, the capital and the interest due were repayable to Jake on the 1st of May 2023, the date he waived the loan. So how would we treat this loan? So this took place on the 1st of May 2023. And he donated it to, what's his face? John Smith. To John Smith. So remember we said that a donation can be in the form of property, and it can also be in the form of you waiving a right to something. So the fact that he waived the right to the loan and the interest payable on that loan, there is a donation that took place. So now we need to determine the amount that is the donation. We know that the capital amount was, hi, Kidimeti, you can go.
Okay, so the loan amount plus the interest would be subject to donation tax, but limited to the general exemption of 100,000. So in this case, we will not pay donation tax because it's below the 100,000.
Correct. Okay. So first we need to give him the amount before we get to the exemption that we're gonna get, right? That is, how much is that? 960. The interest. Oh, there was a hand. Don't go away. Come back. You can go say what you wanted to say. I'm sorry that I missed your hand. So the exemption in this case is because of the fact that SARS and Treasury are so kind, they understand that the normal person would never exceed the amount of 100,000 Rand per annum. So then they say, okay, everybody who's a natural person, you can make you can make donations up to the value of 100,000 Rand every year. So that is the annual exemption that is available to individuals, right? So in this instance, we will exempt the full 12,960 Rand. So next time there is a donation, we need to first reduce our annual exemption amount by the 12,960 Rand so that we can get the available exemption that is left behind or left over. Okay. Then the next thing they tell us that he gave on the 1st of August 2023, he gave 20,000 Rand shares in Rugby Limited to his younger daughter,
Sorry, Dino, I have a question.
Yes.
On the 12,000 rands. So I'd like to know if the interest calculation is based on a compound interest or if it's just simple interest.
It's just simple interest. In this instance, they did not mention whether it is compounded annually or monthly. They just said an interest rate of 8% per annum.
Okay, and you would obviously add, like it will accumulate if it was more than a year or like, yeah, more than a year of amount being owed.
Yes, correct. So in this instance, the loan and the interest was due to be repaid on the 1st of May 2023, which is a full year after the 1st of May 2022. So that's why we just use the simple 8%.
All right, thank you.
Okay. Okay, awesome. Then they tell us on the 1st of August 2023, he gave 20,000 Rand, 20,000 shares in Rugby Limited to his younger daughter, Vinci Black. On the 1st of August 2023, a Rugby Limited share had a market value of 8 Rand. Jake Black paid 100,000 for these shares in Rugby Limited. Okay. So what is our value first and foremost? What value are we placing on the shares that are donated?
Hi, can I
What
try?
value? Can go ahead.
We'll take the 20,000 shares multiplied by 8 Rand and it gives us 160,000.
Whoa, thank you. Vinci Black, okay, it's called, right? And then they tell us, we're gonna take our, I wanna put it under here, okay. 20,000 shares multiplied by 8 Rand per share. And that will give us 160,000, right? Okay. So that is our value of the shares, it's 160,000 Rand. No, 160,000. And then would there be an exemption on the 160,000, right? Yes, Bayesa?
Yes, ma'am. There will be an exemption of 100,000 rands, annual exemption.
Okay. So we said that they will have an exemption of 100,000 Rand. So is the 100,000 Rand still available? Is the full 100,000 Rand still available?
Nope.
So we need to first reduce it. Please remember to reduce it before you go and apply it to your next donation that they make during the year. So now they only have 87,000 and 40 Rand. Yeah. That is the exemption that is available to them. Okay, so then what is our taxable amount? We would take that less the exemption amount. That would give us 72,960 Rand. And what rate are we applying? 25% or 20%?
20%.
So we will apply the 20%. And that will give us 14,592. Okay. Happiness. So just remember to show your workings so that it's clear to the person who's marking your paper. What is it that you did? So then, that is number 4 done. Then they tell us on the 1st of December 2023, he gave Gary a younger brother who was then 35 years old, a usufruct, on 2/3 of a commercial building. Jake would own for the remainder of Gary's life. On the same day, he donated to Bucky's a nephew who was then 16 years old, 2/3 share in the commercial building, subject to Gary's usufruct. On the 30th of November 2023, an independent third party valued the commercial property at 1.2 million Rand. Okay. So here we have 2 transactions that takes place. First, he donates the usufruct to Gary. Then he donates to his nephew, Bucky's, the beddominium, right? So now we need to determine, firstly, the donation of the usufruct. How would we calculate that? How do we calculate the usufruct? Anyone want to take me through the steps? Okay. So to Gary, he gives him the usufruct, right? So firstly, we need to determine our annual value. That's our step 1. Okay. So we know that our annual value is determined. Hi, Palista.
Yeah, ma'am, I think we are going to calculate the annual value for 1,200,000 multiplied by 12%.
Thank you. You're correct. So our annual value, we take the 1,200,000. Oh, let me put spaces because my brain doesn't see them. 1.2 million, right? That is the value of the property that is being donated. Multiply that by 12%, right? But let's go back to the question. They told us something else. They didn't give them 100%. They only gave them 2/3 of the building. So how would we use this information?
Okay, so ma'am, from 1,200,000 multiplied by 12% is going to be 144,000. Then we multiply that amount by 2/3. Then it's going to give us 96,000.
Yes. So we will also take the 2/3. And that will give us the 96,000 Rand. So that is our annual value. Is that where we stop? Adele, you can go ahead.
No, I just have a question.
Go ahead.
As to the 12% of why do we use 12%?
Is the question, why is it that we are using the 12%? Okay. So in the, I want to say the Act. In the Act, they tell us that in order for you to determine what the annual value of the right that the person enjoys, you need to take the fair market value of that specific asset and you need to multiply it by 12%. So SARS and Treasury are the one who gives you that 12%.
Okay, all right. That's all I just wanted to understand. Thank you, ma'am.
So always remember when you're determining your annual value, you use 12%. So maybe let me separate our calculation a little bit. This is what would be the standard. This is only because they told us that they are only giving them 2/3 of that property, and that's why we are then multiplying it by the
2/3, I understand.
Yeah, by the 2/3.
But I think yes, separating it would help a lot, so that
yeah, it's fine. No, I don't want your correction. Okay, I can't put an equal sign there because you saw what happened. 144,000 multiplied by the 2/3. Yeah, and then that will then give us, okay, yeah, and that would give us the 96 above. Let's put it like that, 96,000. Okay, so that is our first step. Now we've gotten our annual value, right? What is the next step? What is the next step? Our next step, let's see if there's in the handout missing.
Shouldn't we be using the tables?
100%. So now we want to see, né? When we're determining our user fact, they tell us to look at the three, okay, they tell us to look at the life expectancy of the donor as well as the donee, né? Then they tell us to also look at the the specific period or the specific fixed period that the person can use that property. So in this case, they tell us it's for the lifetime of, I think it's Gary. Was it Jake?
Jake.
They tell us the remainder of Gary's life. So there isn't a specific period. So we would look at the two periods, right? So we would look at the shortest of the life spelling's not my friend. Expectancy of the donor, the donee, or specific period, right? Specific period. Okay. So our donor is how old? Our donor is 74 right now, right? Wait, let's go back and see. No, I'm a liar. He's 73. What year is this? This is 2023, December. Haha, he's 23. So on his next birthday, he will be 74. So when you're looking at the tables, you will always look at the next birthday of the person, right? So at the moment in 2023, he is still 73 years old. 73 years old. And then our donee at the time, oh, let me write that down. So we look at the next birthday, which is when he will be 74 years of age. Okay. Then our donee, the person who receives the donation, who is Gary, he is 35 years old at the time. 35. But then on his next birthday, he will be 36 years of age. So there isn't a specified period because it would be then accounted for by Gary's age or his life expectancy over there. So which one of the two is the shortest?
Jake's life expectancy will be the shortest
100%
because of his
correct.
age at the moment.
So we use Ndate Jake's life because Jake is 74 years of age, and that means he has the shortest time to live. So we go to our table, and Jake is a man, so we will use on this side, right? So we go down, down. Okay. So which value do we use? We're going to use the one where it says 74 because at the moment he is wise. How? Technology. Okay. So we're going to use 74, right? Because at the moment he is 73. So we always look at the person's next birthday, right? So now we want to look at the person's present value factor. So we use the factor over here. This is the expectation of life. So this tells us that we expect him to live for another 7.77 years. So then the value that we want to then use is the long number, which is the 4,87876. Okay, so that is the value that we are going to use, and we're going to capitalize our annual value with. Okay, so let's go back to our Excel spreadsheet. So we have decided that he's the one. So we're going to use the factor here, the factor, which is the 4.87876. Okay. So in order for us to determine what the user value is, we will take our annual value and we will multiply it by our factor. Annual value of 96,000. Multiply that by the 4.87876. Okay. So we want to have that rounded off to the nearest rand so that it doesn't confuse our brain. So that is the value of the donation that we have made to Gary. Okay. Would there be an exemption for this? Hello?
No.
Someone's mic is unmuted. There's no exemption, right? So that means we are going to be taxing him on the full 468,000 rand and 161. 1 cent. There we go, right? So now we need to then determine what our donations tax will be on that amount. So that will be 468,361 multiplied by 20% because it's still less than the 30 million rand. Yeah. So that is that. No exemption for them. Sorry, Jakey. Then our next part. Now, on the same day, we know that we gave a donation to Bucky's. And Bucky's, we gave him the dominion. Dominion. Oh, goodness. There we go. So how do we then calculate our Bay Dominion? A hint. We will start with our annual value again. Okay. Our starting point is always by getting our annual value. Then, sorry. Excuse me. Then from there, we need to then determine. Okay, so for the bare dominion, there's a difference, right? In this one, they said you must look at the shortest of the three, right? Of the three life expectancies. Now, with the bare dominion, now you need to go and look at the life expectancy of the usufruct. So in our case here, our okay, let me see. So it will be the shortest of the life expectancy of the usufruct, who is Gary, or the specified period. Specific period, which we know it's going to be the same as Gary's life there. They said it was Gary's life. Yeah. Let me just make it correct even here. So it will be the same amount. So we don't need to worry ourselves there. So now Gary at the time is 35 and he'll be turning 36 on his next birthday. So we always want to use the next birthday. So let's go back to our table and look at what his life expectancy is. Okay, there we go. His factor is, right? So we said he's 35 at the moment, so we need to look at the next birthday age, which would be 36. So our factor would be the 8 comma 13647. So you need to use the full number, right? That's the factor that we're going to use there. So in this case, we said our factor will be 8 comma 13647, right? So now we want to determine, we are still determining the value of our usufruct. So the value of the usufruct is the 96,000 multiplied by our factor of 8,13647. That would give us an amount of 8,13647. Yeah. So I get 781,101 Rand. So then there's another step that we need to take. When we are now calculating the value of our bare dominium, we need to take our market value of the asset, which is what we said was 1.2 million, less the usufruct that we have just determined above here, which is the 781,101. And that will then give us our value of the usufruct. Not of the usufruct, of the bare dominium. So that is the oh, I was wondering why it doesn't look wrong. Yeah. That's wrong. Remember we said you guys are leaving me. You guys are leaving me times 2/3. So we must first, the market value is only for the 2/3, not on the full 2 million Rand, because they only gave him the use of the 2/3. So the 800,000 less the 781,101. Okay. So this is the donation that was made for Bucky's. Small, even though he gets the property. The donation is small. Okay. Then we have no exemption in relation to this donation that was made to Bakis. So we need to then go and get the tax on the 18,899. That will give us 18,899 multiplied by 20%. Okay.
20%.
And that would give us 3,780,000 rand. So in actual fact, this part of your table, right, is actually supposed to help you keep count or keep count of your accumulated let's write it like that. Aggregate taxable amount. Okay. So you need to keep adding plus your bot mess. Okay. You need to keep adding to the previous one. Okay. So that's that one. That is equals to that plus this. So this helps you keep track of whether or not you have exceeded your 30 million threshold. Or so that you can now move over to 25%. So this will then be 468,371 times 20%. Okay. Is everyone comfortable with the calculation of our usufruct and our bare dominium? I am doing it slowly, as slow as possible, so that everyone can follow along with how we are doing this calculation. Please, guys, this is your chance to ask questions in relation to the usufruct and the bare dominium question.
Ma'am, my question is, I can see that this is how it has to be done, but in my head, I feel like, but why? Because, okay, fine. We worked it out, and then we had 1 million by 12% that you explained that it's a rule. And then there was a 2/3, and then we got to this 96, okay? And then we are using the factors. We are saying a factor multiplied by this amount that we got of 96, and then it's 468, 361. So to me, maybe I'm not sure if I'm getting myself. There's something maybe that I don't understand or that you need to explain to me as to why I can see it's the rule, but is this to multiply and get all these amounts? It's just for us to determine the tax that these people are going to be paying, and
So,
is it just
so what you do?
Is it just for us? We are working out the figures so that we know how much tax they're going to be paying.
So the reason
my
why
mind-
we're doing so the reason why we do this, is because we want to put a value to this usufruct in the bare dominium. And we are saying we are giving someone a right. We're giving Gary the right to the commercial properties fruits. So if that commercial property is going to be rented out, Gary will receive the income in his pocket.
Yes.
He will receive that income. Bakis has the right to the 2/3 of that property. So you cannot just go and say, okay, Karwane, you're getting the 2/3 of that property. We are gonna take it as you're the one who receives the property and the fruit of the property. We're not Bakis. But actually, Gary is the one who gets that right. So we need to first determine who actually benefits and how much of that benefit are they actually receiving. So this calculation user factor and bare dominium, you also use when you're calculating a user factor of bare dominium that is given for estate duty purposes. So the calculation is the same. You need to still do the annual value. You'll go and determine what the factor is so that you can get the value for the user factor. So this is just so that you can put an amount to that specific right that the person is getting.
Okay, all right. It's because I'm thinking this in like not only what we are doing here, but the reality part of things. Okay, all right. No, it's just to give it a value so that we know how much tax we have to pay. Right.
Yes. So
Okay, thank
imagine
you, ma'am.
now if someone passes away now, and then they have user facts and bare dominiums in their wills, and now you are the tax practitioner who is helping them in or helping the what do they call that person? The executor. I think that's what they call
Yes,
with the
yes.
tax calculation. You need to be able to go and calculate the value of that user fact and the bare dominium. And when SAR says, listen, we don't see how you came to this amount, you must be able to confidently say, this is how we calculated it, and this is how I got to this value for the user fact and the bare dominium, and this is why we are paying tax on this portion only.
All right. No, yes. I get it. I get it. I do understand. And that says if for instance, a person who has been given user fact, when he or she dies, and then the bare dominium gets the property to his own use as well, there will still be tax for something like a transfer. There's going to be tax when that time comes that he needs to pay.
Yes.
From the value. Okay. All right. Thank you. Okay. Thank you.
All
Get
right.
it.
Perfect. I saw a hand. I think it was Andile.
Hi, Tina.
Hi.
Can you please scroll down a bit on the solution? I got lost.
Let's find
On
each other.
Yeah, I got lost on the market value part, the one where you calculated the 2/3 and got 800,000. Yes.
Yeah. So they
Yeah.
told us in the question. Let's go back here. They told us that Bakis was also given 2/3 of a commercial property or the commercial building, right? So he also received only 2/3 of that same building. He didn't receive the full building's value. So in this instance, if they had said to you, Bakis received the property as it is, then you would have used the 1.2 million. But because they specifically told you that Bakis only received 2/3 of that property, you need to first apportion it so that you can get the correct market value that is applicable for Bakis bare dominium.
Okay, so the calculation above the one where we calculated the 96,000 multiplied by that factor, it was for the Bakis.
So here, you're referring to this part here.
Yes.
Okay, so this is the user fract of Gary. So Gary, when you're working out the bare dominium, you need to first work out the user fract value, and then so that you can deduct the user fact value from the market value.
Oh, okay.
So when you work out the bare dominium is equals to market value of the property less the user fact value.
Okay. Thanks.
Maybe I must make this another color so that you go. It's not too bright. Let's put a space there. Okay. Awesome. Everybody happy? And I'm glad if everybody's happy, then I am happy. Okay, then we can go on. Yes,
Can we
Keboho? Oh, I don't know. I must go back.
go back to the question? Let's see the question, please.
You want to go
What
to
was
the
the
question?
requirement? Yeah, let's look at the requirement. What was the requirement? What of
Only now you're asking the requirement. You're hitting my heart, man. So
no,
the
I got
requirement.
lost. Yeah.
Let's find you. So the requirement is to calculate the total donations tax payable by Jake Black. So he's the one who's making the donations of all these lovely things. So now we are calculating how much donations tax he will need to pay over to the SARS.
So we are only concentrating on the 2/3. You are not worried about the 1/3, other 1/3. No? Okay. That's what I was trying to clarify. Okay.
Okay. So you can ignore that one because he didn't donate it. Yes.
Okay.
Ma'am, I think I'm getting lost on something.
Let's find
So if we are calculating the dominion or whatever it is, do we always use the longest period, or like how do we go about that in terms of the factors using the tables?
Okay. So remember, when we are calculating our dominion, we use the shortest of the user fact holders expected life expectancy and the life expectancy, and then or the specific or the period that is actually specified for the user fact to enjoy or the user fact holder to enjoy that that user fact. So it's always the shortest of the life expectancy of the two.
Oh, okay. Thank you.
All right. Never the longest, always the shortest. Yeah. So let's look at our next one. They tell us here on the 15th of January 2024, Onika.
Good evening, ma'am. I think I'm lost here.
Let's find you.
Okay, can we please go back to the solution?
Mm-hmm.
Like, I'm kind of confused. How did we get to using 2 factors? Like, okay, when we started with the user fact until the 96,000, I understood, like, okay. But when you started with the second one, like Gary, I think maybe my network, because I had to leave and come back, because I can hear you that you are talking and typing, but on my screen it was not moving. So I had to leave and come back. So, but I'm trying to see how, like, to understand why now did we have to calculate the user fact of Gary, and using that the factor of, I understand the factor is because of the 36 years, 36 years, and on the table that's where you get it. But like, I'm confused. Why are we calculating, like, using two factors? That's why, like, I'm trying to process.
Okay. So with this one, we used Jake's one, ne? Versus this one where we used Gary's one, ne?
Yes.
Is that what's confusing you?
Yeah, like, I'm confused. Why are we using like 2 different people's to use user facts? Yes.
Okay, awesome. So with the user fact calculation, the first one, this one, ne? When you're calculating the user fact value, they tell us we need to use the shortest of 3 people's life expectancy. The donor, the user fract, or the donees, or the person who's receiving the user fract or the user fract holder, or a specific period. So you use the shortest life expectancy of the 3. In the first part, Jake had the shortest life expectancy because he is the oldest person. So we used his next birthday, which is 74 years. 74 years. And that's how we use the factor of 4,87876, right? So that's why. Firstly, here they tell us we need to use the 3, the shortest of the 3. Then when it comes to the base dominion, they tell us, ignore the donor. Don't even look at the donor. Look at only the user fract life expectancy, as well as a specific period that might be provided to use that user fract. So in that instance, we only have Gary and his lifetime. So we would only use Gary's information here. So whereas the user fract, they tell you to use even the donor's information, the bare dominium tells you only look at the user fract information. Don't look at the donor's information. So that's why we are using 2 different factors.
Okay. Okay, I hear you. I understand now. I was so lost. Thank you.
Welcome back. Okay, so we can go to our next transaction. They tell us that on the 15th of January 2024, Jake Black won 65 million in the lottery. On the 31st of January 2024, he donated 30 million to his only grandchild, Pearl Black, the daughter of his predeceased son. Okay. So how would we treat the 30 million rand? What would we do with the 30 million rand?
Okay, I think you would take that 30 million, right? Then you would less the, what is it called again? That annual exemption, and then you multiply it. Then you multiply it by the rate, which is, what is it again? 20%.
Okay. Do they still have any portion of the 100,000 rand left?
No.
Oh,
So
no,
there's nothing left.
it's not there.
Yeah, so they finished it here on the 1st of August. So they have nothing left. So now they will not get any exemption on that. Even if John or Jake came back to SARS and said, no, I am actually maintaining this person, SARS will say, this is not, what's the word? The English is gone. Let me look for the wording. Let me look for the wording, right? The wording says, I'm gonna get it. A bona fide contribution to maintenance. That's the word, bona fide, bona fide, that one. So if this person had said, oh no, but it's a bona fide maintenance of the person, then they could have gotten the exemption. But this is not a bona fide contribution to their maintenance. This person is just giving 30 million rand. It's not maintaining the person. You're just giving them nice money. So you will be taxed on that money. There will not be an exemption for you. Sorry. Okay. So there's no exemption with regards to that one. So we will tax them on the full 30 million. So we are working on an accumulated or aggregate amount, 30, how many zeros? There we go. And then now we need to calculate. So now we have exceeded our 30 million threshold. So now we need to then use the 25%. Okay. So a portion of it will be taxed at 20%, and the other portion will be taxed at 25%. So let's do the maths. Let's do the maths. So we have 30 million that we've donated just now. Just want to see if the zeros are right. Nope, zeros. One is missing. B. Okay. Is the 30 million donation that we've made. Out of the 30 million that we can still apply 20% to, we need to first deduct the 560,000 that we've already donated throughout the year. 560, 220, right? That we've donated throughout the year. That is that. So then we are left with only 29,000. 29 million. What's going on? Yeesh. 29 million that we can apply 20% to. Multiply by that. This is not working for my brain. Multiply this by 20%. 20%. Okay. That will give us 5,887,957. Okay, that's the first part. So we need to put that down. There we go. I hope you guys are following along what I'm doing here, right? That's the first portion. Blocky. Then, now, there's a portion that is still left over that we need to then tax using the 25%. How would we then calculate it? So we are saying we have how would we calculate this? Because I'm looking at the solution and I'm not agreeing with the calculation. How do you guys think we should calculate this? Hello? Is anybody there? This is what the solution says.
Wouldn't the 560 be the one that you multiply by 25? Because then the 30 remains is at 20%.
Okay. There we go. There we go. There. There. Here we go. Much better. So the 560, 220. I'm accepting that. Then that multiplied by 25%, and that gives us 140,000 rand. That still needs to be included as part of that donations tax. Okay. Happiness. So any donation that now takes place after this will be taxed at 25%. So this, let's just do it like this so that you can see what we did. 25%. No. Okay. Okay. That is the one. No, now I did it. I did something to the things. 20 times 25. Yeah, there we go. Happiness. All right. Okay, let's see our last transaction. What happens here? Then they tell us on the 1st of February 2024, he donated 25,000 Rand to UNISA. The university used the donation to subsidize the salary they were paying to one of the professors in its Department of Tax. UNISA qualifies as a public benefit organization. How would we treat this amount? Come, guys, let's finish strong. How would we treat this?
Is it not an NPO and therefore it won't be taxed?
Yes. Both
But
of you are
isn't it
correct.
supposed to also specify that there is a Section 18A certificate in order to qualify for exemption?
So in this, in our exemptions, it doesn't ask you for that. It just says you need to know, you need to be aware of the public benefit organization status that it has.
Okay.
So there we go. There we go. Then UNISA, it received 25,000 Rand. This is exempt on the basis of, let's just move it one line down so that we don't bump into the other stuff there. That, okay, plus nothing. Okay, so there's nothing here because this is a section 56(1) H exemption. Exemption. I know it's difficult to remember the sections, the specific sections, but like I said the last time, we should make it our aim to try and remember the sections, because it's not just about getting our degree, but also what is it that we're going to be doing in the future. We still want to keep our knowledge that we can use it in the outside of the books. Yeah. And it's cool when people hear you speak of tax and the sections, and it's just know the sections. It's nicer like that. No, this looks ugly. That is not right. That's not what we want to do. We don't want to add. We want to just bring it forward. Okay. So that is the donations tax that is payable by Mr. Jake Black for the year. So he's made quite a lot of donations. Let's see what percentage is it. Quite something. Technology don't love me. Yeah, no, technology doesn't love me. Anyway, let's leave it at that. It is what it is. So that is our donations tax calculation. Do not laugh at me. Why are you laughing at me? Technology does not love me today, so it's fine. I give up. Sometimes you must accept that you've been defeated by technology. So
you still have got the energy. Still have got the energy.
But it's still 20, it's like some 20%, some odd 20%. Yeah. So it's quite a lot of money that he will need to pay over to SARS on the manual process that is there. But now I think there's some sort of system that they're trying to put together. Yes, Kidimezi.
I'm a bit confused on the 30 million calculations where you took the aggregate amount and calculated it by minusing that 560,000, where we've been calculating using 20%. Are we not supposed to be using 20% of the 30 million because it's below the 30 million threshold?
So it's on the aggregate for the full year. So if at any point in the year you exceed that 30 million, you will then you will use whatever's less than the 30 million, you use the 20%. Whatever exceeds, even if it's just by 1 rand, that 1 rand, you're going to work it out on the 25%.
Okay. Why I'm asking is that previously when we were calculating the donation tax, we were using 20% on the amount, not on the aggregate amount. I'm not sure if you understand my question.
On this ones, ne? On these ones.
Like previously, yes. Like for example, on the bare dominium, we use 20% on the 18,000, not the aggregate amount.
Yes. Yes. Okay. I get your confusion. So the reason why it looks like we're working on the aggregate here is because we are trying to work out the portion that is still available for the 20%. And what portion is actually going to be taxed for. So in actual fact, let's remove this because that's what's confusing. Ne? Let's work on the 30 million less the 29,43970. I'm praying this gives me the same answer because sometimes, like I said, technology doesn't know me. Ah! Hold on. Gonna get it right.
So that 294,978, is it what is still available on the 30,000, 30 million threshold?
Yes.
Okay,
That is
and
correct.
anything above that? Okay. Now I think I'm following you now. So anything above that then would be taxed under 25%.
Yes, that is correct.
Okay.
Yeah. Is it easier to understand like this?
Yes, it is easier because we are limited to 30 million. So we donated 30 million, and then so far we have calculated tax. So out of the 30 million, we have used 560, 220. So whatever is still available of that 30 million will be taxed at 20%, and anything above that would then be taxed at the 25%.
Yes, that is correct. Yeah. I think we had one more hand. Andile, I think it was Andile, you had your hand up.
I don't know. I wanted to ask about the 6 million at the end. How did you get that? I got confused there.
Oh, this is just the total of the 14 million. 14,000, 93,000, the 3,000 plus the 5.8 plus the 140.
Oh, okay.
So it's the total amount of donations tax he would have had to pay throughout the year.
Oh, okay. Thanks.
All right. Awesome. Thank you, ladies and gentlemen.
Thank you, ma'am.